What happens when a United States senator puts regulators on the hot seat? Senator John Kennedy grilled top banking regulators, and it wasn't pretty. Welcome back to Capitol Conservatives. Don't forget to like and share. I couldn't believe what I was hearing. Kennedy asked Gruenberg, what the hell's going on at the FDIC? Gruenberg admitted the Inspector General's report was deeply disturbing. The report described a toxic culture where women were harassed and demeaned.
Thank you, Mr. Chairman. Mr. Gruenberg, what the hell's going on at the FDIC?
It's a troubling question, Senator. I read the report as you did. I indicated earlier, it is deeply disturbing and troubling, and we're going to bring all the resources of the FDIC to bear to understand what is going on, what has occurred, and how we can most effectively address it.
How long have you been at the FDIC?
I joined the board as a member in August of 2005.
Almost 20 years then, huh?
Sir.
You ever sexually harassed an employee at the FDIC?
No, sir.
Apparently you're the only one. I just find this incredible. A former female employee recalled her male colleagues saying women needed to use sex to get ahead at the FDIC as they stared at her. Did you read that?
I did, Senator.
Quote, according to one young woman, it was just an accepted part of the culture. One of the female examiners received a photo of a colleague's penis. During lunch with an examiner, another young female employee who had become friendly with this person she was having lunch with, the guy she was having lunch with complained to her about his marriage, telling her he wasn't having enough sex. And then he said to the young woman, obviously, if I walked into this office and you were naked, I'd F you right here. Did you read that?
I did, Senator.
Did you read the 2020 Inspector General's report when it said that the people at the FDIC were acting like they were in Animal House or Porky's Revenge? Did you read that report?
I read the Inspector General report.
Kennedy pressed, what did you do about it? Gruenberg admitted he did nothing at the time. Kennedy's response was brutal. You ought to hide your head in a bag. If you agree, tap subscribe to join Capitol Conservatives. Gruenberg dodged responsibility, blaming the chairman at the time, but Kennedy wasn't buying it. He reminded Gruenberg when banks failed, the FDIC blamed their boards. But now, the board is blameless. The double standard was glaring.
And what'd you do about it?
Well, I was not chairman at that time. There were 15 recommendations, if I may say, 15 recommendations in that report, and I believe the agency addressed all 15 of those.
What did you do about it personally? What was your position at the FBI?
I was a member of the board at the time, but I was
what
not.
did you do about it personally?
At that time, I didn't have the responsibility of the chairman.
You didn't do anything, did you?
Not at that time, Senator, no.
Okay. Did any of your other fellow board members do anything?
As a general matter, that falls to the chairman who's responsible for the day-to-day
It was
management.
somebody else's problem, not yours.
No, well, I was a member of the board to the extent that we were consulted, but in this matter, it's really a management
You didn't think
issue.
you had a fiduciary obligation to those young women and to the organization and to the banks that put up the money?
Well, certainly as a board, we had that obligation, but it really falls to the chairman to take the lead on this.
Somebody else's fault.
Well, it was a
That's
chairman.
what you're saying, isn't it, Mr. Chairman?
No, I think the board,
Sounds to me like it.
well, not, Senator, if I may say, the board certainly has a oversight responsibility, but in the day-to-day management of the agency, which matters like this would fall to, I think it's reasonable to expect the chairman to take the lead.
Well, when the banks last spring screwed up out in California, you blamed it on their board, didn't you?
I think the report that was done on the failure found that the root cause of the issue was the management of the institution.
Right.
They also found accountability for the supervisors.
The board was blameless. Is that right? Is that what you're saying?
No, I think the
Kind
agency,
of like the board at the FDIC, it's blameless.
if I may say, Senator, I think the report found, and I think I would indicate that we shared responsibility as a supervisor.
Kennedy turned to the Federal Reserve's Michael Barr, questioning the new Basel III capital requirements. He asked if these rules would just make credit more expensive and push people toward unregulated non-banks. Barr insisted the impact would be modest and mostly affect trading, not lending. The exchange showed clear tension. Regulators say they're fixing problems, but lawmakers like Kennedy aren't convinced. This wasn't just another hearing. It revealed how flawed oversight has become. At the FDIC, warnings were ignored. The real-world effects could hurt families and small businesses. If you believe in transparency and accountability, hit subscribe for more.
You and your colleagues ought to hide your head in a bag. This is no country for creepy old men, and they got no place at the FDIC. And this wasn't a news flash for you. You had a 2020 report and you sat on the board. You didn't do anything, and your colleagues didn't do anything. Mr. Barr, let me ask you about Basel III Endgame. I know you know this, about half of our credit now in America comes from non-banks. Isn't your increase in capital requirements just going to make credit more expensive for banks and push people in the non-regulated, non-bank financial system?
Senator, the capital increases mostly affect trading activity of banks and other non-lending activities of banks. With respect to credit, we expect the proposal to have only a very modest effect on the price of credit. For example, if all of the operational credit risk...
You would stake your reputation on that?
I believe that the analysis is correct in the proposal to the rule.
Okay, if I could ask one more question, Mr. Chairman, if that's okay.
But we're very open to comment on the proposal. Sure. So if people have other analysis that would help us make a better judgment about that, we're very open to it.
The banks out west and elsewhere that went broke last spring, would this change have prevented that?
The banks that suffered losses primarily because of interest rate risk.
And this proposal,
sorry, if I may, sir.
Senator Kennedy, last question. This is it.
If you could just answer my question.
I'm trying to, sir. Yes, it would directly address that because for large banks, their interest rate risk would be brought into the capital roll. Their unrealized losses and gains would be reflected in capital. So it does directly address the kind of risk that we saw.
Senator Menendez is recognized.
Senator Kennedy's grilling of Gruenberg and Barr was about trust and responsibility. Are the people in charge really doing their jobs? When watchdogs fail, Americans pay the price. Stay informed, stay engaged, and stay conservative.